The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and thank you so much for joining us today. My name is Jennifer Vivian. I'm the Manager of Entrepreneurial Services at the City of Brampton, and I'll be your host for this morning's Entrepreneurs Connect webinar on the cash flow forecast. This session is hosted by the City of Brampton's Entrepreneur Centre in partnership with Meridian. The Brampton Entrepreneur Centre is an innovative partnership between the province of Ontario and the City of Brampton, belonging to a network of 54 small business enterprise centres across Ontario that offer entrepreneurs various tools to help them start and grow their businesses. I would like to pay special attention to our series partner this morning, Meridian. Without their generous and ongoing support of our centre, event series like this would not be possible. I would also like to highlight that Meridian has generously sponsored a brand new 4-person meeting pod for our office. If you've been in the downtown recently, you'll be able to see it in the front window. Otherwise, we look forward to welcoming everyone back into our space when it is safe to do so. Meridian is Ontario's largest credit union and second largest in Canada, helping to grow the lives of more than 370,000 members with more than 75 years of banking history. Meridian is 100% owned by its members and has 89 branches and 15 business banking centres throughout Ontario. Before we begin today's presentation, I'd like to go over a few housekeeping items. First off, this webinar is being recorded and a copy will be made available on the City of Brampton Economic Development's YouTube account. We will follow up after today's session with a link to the recording along with a copy of today's slide deck. There will be time at the end of the presentation for Q&A. Everyone will remain muted, so we ask that you please use the question box on your participant control panel to type in your questions. In the event we are unable to get to your question this morning, you're always welcome to email us or the speakers directly. So before we begin, it gives me great pleasure to introduce our speakers today, who are going to speak to us about the cash flow forecast. Roshan Hussain is a branch manager at the Brampton and Sandalwood branch in Brampton and works with an incredible team who puts our community and members first. He is a proud father of an intelligent and vivacious 7-year-old princess who is also his travel companion. Roshan has been in the financial retail industry since 2005 with a knowledge in lending and investments and completed his MBA in 2017. He loves to coach his team and his members to their successes. During his spare time, he enjoys coaching lacrosse and soccer and is a huge Toronto sports fan. Also joining us on the presentation is Khurram Shahzad. Since immigrating to Canada from Dubai in 2001, he has called the City of Brampton home with his wife and 2 kids. With over 18 years of banking experience, Khurram opened Meridian's first branch in Brampton in 2016 at Brampton and Sandalwood. Continuing with their expansion, he led the opening of their Fletcher's Meadow location in the summer of 2019 and the new Brampton City Centre location in the fall of 2019. Currently, he manages the Chinguacousy South and the Brampton City Centre locations. His wife likes to travel, and now so does he, and in his spare time, he loves to play and follow cricket. Please join me in welcoming Roshan and Khurram.
Thank you so much for that warm introduction. Welcome, everyone. It's nice to see some familiar names from last week's presentation. And I'm very honored to do this presentation today with Khurram. So again, welcome. That introduction, yeah, traveling is a theme, and unfortunately, COVID has put a damper on that. And COVID has taught us to learn how to pivot much more than perhaps we used to in the past. We would have loved to have met all of you in person, but you know what? This is a great alternative to do this virtually. We look forward to engaging with any questions that you may have, as well as throughout the presentation. Any comments as well, definitely feel free to put it in the chat, and we'll do our best to get to all the comments as well. So today we are going to talk about cash flow, and cash flow is all around us, and from our day-to-day family activities, items that could impact our family, to a grander scale that involves financial statements and how it impacts businesses. At some point in our lives, we will complete a cash flow analysis. So today, we will discuss, we will define cash flow, understand terminology in cash flow forecasts, factors that impact cash flow, some tools and calculators, and if we have time, real life scenario and discussion. If you hear me use the terms cash flow forecast, cash flow statements, those are interchangeable as well. So please don't confuse the two. In the previous presentation, if you were at it, we discussed the break-even point, and Khurram discussed how many units of candles we had to sell to break even. One of the things that I should have asked Jennifer to mention was that I tell really bad jokes. So in the previous presentation, Khurram was discussing a fictitious company called Khurram Candles. Well, today, Roshan's Candles had a cash outlay. We spent money and purchased and took over Khurram's Candles. So today it's going to be Roshan's Candles. If you like that joke, you can put a thumbs up. So questions to the audience before we get started. Can anyone tell me in the chat, from a business perspective, what may be included in a cash flow statement? And I'll give you I'll give a minute.
So for everyone on the call, there is a question panel or chat panel on your participant control panel. So use that to type in your questions and comments.
So what may be included in a cash flow statement? Do we have any accounting majors here?
We do here. Let's see. Income and expenses.
Okay.
Cash in, cash out.
There we go. The amount of cash you have. Okay. So those are some really good examples. So absolutely, this page here gives a brief example of what you may see on a cash flow. So the first part of it would be the cash inflows. So sales, for example, if you sold $850 worth of candles, that is a cash inflow. Cash outflows could be anything from your expenses, such as your utilities, your wages, your rents, professional fees. This is a very simple example of what a cash flow forecast looks like, and we'll go into it a little bit deeper. So that being said, now that you've seen a cash flow statement, or perhaps you've already completed one, can anyone tell me what the definition of a cash flow statement is? And I'll look for your responses in the chat. So once again, can anyone tell me what the definition of a cash flow statement is?
We have a few answers that are
Of current position. Okay, that's a good one. Okay, so that's a good one. So the Cambridge Dictionary defines cash flow forecast as a plan of how much money a company expects to spend and receive over a particular period. A cash flow statement and as defined by the Corporate Finance Institute, it's a cash flow statement shows how much cash is generated and used during a given time period. It is one of the main financial statements analysts use to determine the viability of a business. It is often referred to the statements of changes in financial position. So you may also hear that terminology, same thing as the cash flow. So why do you think, I'm going to put it out to the group again, why do you think you need a cash flow statement? I'll give a minute there for the responses. So why do you think we need a cash flow statement? to understand. So say, Ike, I think it is. You were at the last presentation. Thank you for that. So what I have here is to know the health of the business. That's fantastic. It's important to know the revenue that's coming in and how it's being spent. Also to figure out your profits. That's another good point. Yeah, those are all really good points. So why do you need a cash flow analysis? So I'm going to provide here with 5 points and we'll discuss them. A business financial story is not told just by the balance sheet, income statement, or the retained earnings statement, but the cash flow verifies the information contained in the 3 financial statements. Managing cash flow is a central part of managing your business. Basically, your cash outflows and expenses should always be less than your cash inflows. What's very important is in point 3 is that a cash flow analysis will allow you to manage the inflow and outflow of cash so that your company has enough cash to pay its bills, finance its growth, and keep borrowing under control. I highlighted these, and these are very important, especially the keeping the borrowing under control. Knowing your cash flow will help you to make prudent and sound decisions on what type of borrowing you undertake. We see in the finance world many who do not understand their cash outflows and inflows, and thus stay in a vicious cycle of credit card debt or high interest loan debts. So it's very important to understand what your inflow and outflows are. Cash flow analysis, it produces a measure of performance of your business on a day-to-day cash flow, cash generated by ordinary business activities, and it incorporates other non-operating cash flows such as investing in new assets or selling them off, borrowing or repaying debts, and obtaining new capital from owners. A solid cash flow will assist you in obtaining capital and financing should you need it, which is the subject of our next Brampton Entrepreneurs Connect series with Shafi. So can anyone tell me, so I've said a few times, some 2 key components of what is involved with a cash flow. Can anyone tell me from their perspective what potentially those 2 key components are? Give a minute there. And I think that was Rodriguez. I saw your comment from your previous, sorry I missed that one, to help make good decisions on our business. But can anybody tell me what are the 2 components of cash flow, of a cash flow statement? Okay, so I said it a few times. So incoming cash flow and outgoing cash flow. Those are the 2 main components. So incoming cash flow is the expected earnings from sales. You know, how much candles are we selling in terms, let's say we sold $2,000 worth of candles, that's $2,000 cash in. If I, as a business owner, new capital, have invested for my own personal savings into the company, that's cash inflow into the company. If I borrowed money from a bank for the business, that's also a cash inflow, but we'll get back to that as well. Let's say that I sold a machine that makes the candles or some sort of asset that helps me make the candles. That is a cash inflow into the company, as well as accounts receivables are examples of cash inflows. Some examples of cash outflows is, you know, for that wax, we have to pay the suppliers. So that's a cash outflow. Daily cost of operations, such as insurance, rent, we have to pay for that. Loan payments, so if you borrow that money, you have to pay it back. So another example of cash outflow. And of course, if you have employees on your with your company. So these are some examples of what cash inflows and cash outflows are, and these are the 2 most important. We're going to take a little bit deeper dive into what the different segments and components of a cash flow statement would look like. And the cash flow statement is partitioned to 3 segments, namely cash flow resulting from operating activities, cash flow resulting from investing activities, and cash flow resulting from financing activities. There is a 4th component, and I'll get into that just now, but let's talk about the operating activities. So cash flow from operating activities, for example, if I sold $2,000 worth of candles, but I had to pay $1,000 worth of cost of goods, maybe the wax, for example, there is a net cash inflow of $1,000 right there. As mentioned earlier, if I'm investing, so if I'm investing into the company directly, or if that's a cash inflow, or if I'm selling a piece of machinery or other assets from my company, that is a cash inflow. And what you'll find is from time to time, companies will sell their assets to bolster their cash reserves if needed. If I'm purchasing, on the reverse part of that, if I'm purchasing a piece of equipment to help me make my candles, that's a cash outflow. Financing activities, again, if I'm borrowing from the bank, that is money that's cash in. If I am repaying on a monthly basis or biweekly basis, that is a cash outflow. There is a 4th component, and it may also include a disclosure of non-cash financing activities, namely that is amortization expense, and that is a topic on its own. You may reach out to me and I could explain that in much more detail, but the amortization expense on a high level is basically taking your assets and amortizing over time, basically the useful life of the equipment over a period of years. It could be 5 years, or it could be 10 years. So I'm going to go back to the group. I think I spoke a lot there just now, and asked, what do you think are some factors that could impact cash flow? Give a couple minutes there. So I'm starting to see some responses. So credit terms, absolutely. Product availability, absolutely. Sales volume, taxes, regulations. You guys are doing this for me. So let's go right into the next one. So factors that impact cash flow. There's the controllable factors and the uncontrollable factors. So collection of accounts receivable, I believe someone said that. So your credit terms and trade discounts. I could sell my candles and have you pay immediately. Or if I'm selling, let's say, to another company, they may want some credit terms, maybe payable within 30 days or 60 days. And if they pay within 30 days, they get a 5% discount, for example. That all impacts your cash flow, the ability to receive cash. If I'm doing it over 30 days or 60 days, it's going to take longer for me to get that cash. Also, the enforcement of your credit policy and how consistent you are. If you are doing credit terms, let's say 30 days, but a company is late, are you enforcing the repayment of your invoice? Controllable factors also is your purchase and sale of your inventory and repayments of accounts payable. Some uncontrollable factors is, and I believe we saw this in the comments as well, is the exchange rate fluctuations. If I'm buying the wax that I need to make my candles from the United States, they want to be paid in US dollars. Transmission delays. We saw what happened in the Suez Canal and how how much the exchange of goods was delayed because of the blockage of the Suez Canal. If my product, my wax is delayed, it's going to take me a longer time to get my product out to be sold. Political risk, tariffs. If there is a disagreement or a trade war or some sort of tariff that's included on top of my wax, I have to. That's an increase in cost for me that I potentially may need to pass on to my customers. But of course, we've all seen pandemics. COVID-19 has shown us that again, like I said at the beginning, we have to pivot and pivot in many ways that we haven't seen before. But unfortunately, for a lot of companies, it meant that getting their products out to the marketplace is slower, and therefore receiving cash for their products is slower. So at Meridian, as well as, and not just Meridian, but your bank, wherever you bank, there are ways that you can optimize your cash management. We have 8 examples here that I'll go through. Online banking, Meridian offers 2 online banking options to fit your business needs. Depending on your business size and needs, your bank or Meridian can help determine which platform is best for you. You can also do what's called an automated funds transfer, which provides your customers with pre-authorized payments or provide direct deposits to your employees. Express cash check deposit, so deposit checks from the comfort of your own home using a check scanner. So improve your cash flow by having checks deposit instantly, or become a biller on other financial institutions' banking platforms. Allow your customers or clients to send you money to your business by becoming a bill payee. Online tax payments as well. Filing your taxes accurately and on time can be daunting. That's why we partner with TELUS Assure to bring you a simpler, affordable, and less frustrating way of filing your taxes. Merchant services. If you go with a merchant service, or even the Q Squared or the iPhone payments to accept payments right away. Managing your payroll through our payroll service partner Payworks, you can automate your entire payroll process, or auto deposit for business. You can set up interact e-transfers that will automatically deposit to your business. So with that, I wanted to give you some tools and calculators. On our Meridian website, small business as well and cash management tab, we have an amazing cash flow calculator as well as a burnout calculator that I'm going to show you. If you didn't want to use ours, there is this Excel template of cash inflows and outflows that you can use. And I'm hoping that we can go through a live, I'm going to pull this up right now, demonstration. So this is directly from our Meridian website. And I've already started this for you. And as an example, this will say March was the first month of operation for Roshan's candles. And we'll show you just quickly some of the cash inflows and cash outflows. So March, I started off and I had an opening balance of $0 in my bank account. I sold 10,000 out. These are just made up numbers. So for your industry and your company itself could be very different. But I just wanted to give you an example of what this can show you in terms of your changes in cash position. So let's say that I sold $10,000 of a particular type of candle. I provided $4,000 from my own savings, capital injection, I'll call it, into the company. So cash, total receipts is $14,000. Less any materials, and again, these numbers are fictitious, packaging, as well as overheads, and there's accounting, maybe I have some debt payments, maybe my credit card, financial institution fees, freight postage because I have to mail out the candles, insurance, marketing, portion of my car loan, power, portion of my rent, repairs, salaries, maybe I'm paying myself back, stationery, tax, and maybe a website hosting. So all of my cash payments totaled $8,079. The net cash flow is the $14,000 minus the $5,921. My closing bank account balance is $5,921, which you'll see here now in April, right here. And let's say I decided to bring on a different type of candle, maybe a different type of smell. And so in the first one, I sold 12,000. The second one, I sold 5,000. I didn't make any much changes to my expenses. Maybe went up a little bit because I got that second candle. My total cash inflow for that month is $6,641, plus what I have in the bank account already, $5,921. My closing bank balance is $12,562. In May, it was a tough month. I've only sold $1,000, but some of my expenses remained the same. So it shows you, if I only sold $1,000, but my expenses were $10,359, my net cash outflow was $9,359. My opening bank balance from the previous month was $12,562. So therefore, after this negative cash flow for the month of May, I have $3,200 remaining. So this, again, this is available, will be available on the presentation as well as on our website. Your bank will have similar tools and resources. And there are a lot of tools that you can utilize within Microsoft Office itself, but the Meridian one, it's great because you're able to change some of the, to whatever you need to for your specific business. So I'm hoping we can get, let's see, we can get the burn rate calculator as well. This one here will tell you how long your business can survive before it needs more funding. Again, it's on our website. And so let's say that enter your cash and capital reserve. So let's say that I injected $4,000 into the business from my own savings. My total monthly cost, let's say, is $2,000. And let's say that I average about $2,000 worth of sales. Again, fictitious. What this will tell you is that because, and this makes sense, is that I will never run out of cash because, and this makes sense because I'm selling $2,000. My expenses are $2,000. My capital reserves from whatever I injected into the business is $4,000. So that makes sense. But let's say that my average monthly sales is only $1,000. It will tell me that I will run out of cash on August 13th of 2021. And let's say that my average sales is $3,000 and I kept my expenses the same. You can see it changes to another. So thank you, Adam. I saw that comment that these tools are fantastic. I appreciate that. I'm just going to quickly look at the chat to see if I've missed any comments. So I'm hoping, Jennifer, if maybe we could probably get a participants to maybe go through a live example.
That would be great.
As well.
Yeah, for sure. So for those in the group, if we would like, maybe we can go back to this example here on the Excel sheet, and if you want to be able to see, and maybe for your own business, if you want, we can plug through some numbers. Or I can keep going through this just to see how it shows, how it changes as well. And I'm still just going through. There were some questions as well. There were a few questions. As a sole proprietor, where do I enter personal drawings, or does that go under the salaries line?
So I'm assuming that the personal drawings is paying yourself back. So, and this is where you'll need a really good accountant to guide you in terms of how you should show that you were paying yourself back. It could go under salaries, or it could go as a separate line to show that you're paying yourself back, maybe through dividends. Your accountant would be able to set up a plan for you that is best for you and your business. As well as keeping in mind tax law. But yes, you can put it under salaries, or you can have it as a separate line, for example, as dividends.
And then one more question here. Do you have any tips for accurate cash flow forecasting?
Do you have any?
Any tips for accurate cash flow forecasting? I'm assuming probably primarily with sales.
That's a wonderful question. It's Khurram here. So, accurate cash flow forecasting, and I think that we spoke about this as well. My advice would be honest. Be honest to yourself and take that time to invest, because we can create a cash flow statement, and then you can have something where there's a government regulation. And let's look at our example right now, which is a lockdown. And as a result, you are not able to open up your store if there was a location that you were selling through. And as a result, or now you have to do curbside delivery or pickups. And as a result, you might need to hire, maybe a couple of part-time employees. That is what will impact your cash flow. So how accurate can a cash flow get? It's how truthful you are and how realistic you are with your scenario. And as you can see from this tool as well, there's always that other line. And just with ourselves and our personal lives, when we try and budget, there's always a contingency. That's what, as advisors, we always advise our members that, pay yourself first. So there should always be a little contingency line, which is a certain percentage of your sales that you should be putting into a reserve fund for you to be able to tap onto if different situations arise. It will only make it better for you from a cash flow perspective. I'm hoping that answers that question.
And to go on what Khurram's saying is just, to use the tools that are given to you on a consistent basis. And as Khurram said, is to be very honest with yourself and in terms of what you believe you will say, receive in May and June, and to go in and to accurately input your correct numbers will give you an accurate, forecast of where your changes in cash position will be.
For sure. And I guess important to use tools that have already been created, because the formulas and calculations are already built in. So all you're doing is just plugging in your numbers. You're not having to worry about having to manage all the calculations.
Correct. Yeah. Were there any other questions?
I think, Roshan, what we can also do is take an example of a service, because I take it from our previous call where one of our participants had inquired, what if your service and you don't have very specific raw material costs or operating costs as such. So when you're looking at it from a service aspect, I think the biggest, in my comment from last session as well, the biggest factor becomes you yourself. If you're a sole proprietor and you're a chef who does gourmet, cooking for either events or even for homes, well, that could also be the thing where you would assign yourself a bigger portion of that employee's salary and all to make sure that you take care of that piece as well. Similarly, other service industries you follow the same routine. If you are taking a product and then tagging on a service to it, that's something where you can again look into some of the production costs. And let me give you an example here. And you know what? Here's a little promotion for you as well. I sincerely apologize if I get your name wrong. I think it's Saint Ites. So thank you for connecting with me on LinkedIn as well. And your profile showed that you deal with security systems, right? Home security systems. So that's a great example that I can use here, where you are probably purchasing or buying the technology, but then your input would be the service aspect of it, where you're now installing and then taking care of it. So you have your fixed costs, which are in terms of the equipment that you're buying, and then you have your service aspect, which would take a heavier portion of that.
That's a really good point, Khurram, especially because with the service industry, you don't really have tangible goods that you can sell. So to be able to really understand what's impacting your cash flow in and out is very important. Do we have any other questions or comments? I see that there's question marks.
Doesn't look like there's any questions at the moment. Saint Ike just commented that you're right. Thank you. So that's great. Just a friendly reminder, if you have any questions, feel free to type them into the question panel on your participant control panel. And perhaps you think of something after today's session that you forgot to ask. You might take this information back, digest it, and think of something that you meant to ask and didn't get a chance. You're welcome to email us or the presenters directly, and we'll be happy to get back to you.
Absolutely. As Khurram said, he's on LinkedIn, so am I, at Roshan Hussain. So more than welcome to email us directly, and we will get you the correct best answer as possible as well. And if there's any related specifically to us, our experience with cash flow, we'll be happy to talk about it.
And just as a friendly reminder, we will be following up with everyone with a link to today's recording, as well as a copy of the presentation that includes all the links you need to access these great tools and templates. So we'll just leave the question panel open. I don't know if there's anything else you wanted to add, or if we just want to wrap up here with some final comments.
So with respect to adding one additional thing to this whole series, as we looked into our first session, which was business viability and break-even point, our second one is business viability cash flow analysis. So for those of you who have been following us between the first and the second, and if you've had an opportunity to do a little bit of homework for your own businesses, congratulations, because you've just created yourself a template to be able to walk into our next series, which is financing your business and being able to possibly convince your bank, credit union, or lender to be able to look at these forecasts, look at your break-even points, and make an informed decision as to how you plan to repay their money back, right? So, thank you for your participation. Thank you for your engagement with these sessions. And once again, take some time, invest in your business, and you invest a lot, invest a little bit more by making sure you have these tools set in, because they will eventually help you, whether you're wanting to make a strategic business decision, either to expand, maybe to consolidate, move facilities. Simply plugging in your rent in your cash flow, if you're moving on from something that's costing you $500 of rent per month into something that is costing you $300, you will be able to get a very quick snapshot as to how much more cash flow you'll be able to generate. So if you're looking to expand your business and need another, let's say, $50,000, and your loan payment on a monthly basis comes out to maybe $150, what you can then do is increase your interest costs or banking costs by that 150, and then find opportunities where you can actually reduce your cash outflow so that now you can substantiate. So setting the stage up will help you make those strategic decisions as well. Roshan?
Yeah, really good point. Absolutely, really good point there on just going through these templates and filling these templates out yourself, and going through, and hopefully we see the majority, or if not all of you, on our next call with Shafi for business viability. And if you fill these out, take the time to put together really good cash flow forecasts, as well as in conjunction with your other financial statements, be able to perhaps convince your with a business plan, convince your bank, credit union, or lender for investing or loaning you money for your company. Really good points. Jennifer?
Thank you.
Back to you.
Awesome. Thank you again, everyone, for participating. Nice to see that there were some familiar faces from last week's session, and we look forward to hosting you again for the next 2 Wednesdays, same time, 11 a.m. And we will be following up today with an email with all the information you need from today's session. So thank you again. It looks like, sorry, just before we quickly wrap up, there is one more question that has come in. How or where could I find this build-in cash flow forecast? I'm just wondering if you're asking how you can access this tool. We will be sending out all the links to these online tools and templates that you can use. I'm hoping that answers your question. If not, if you want to maybe clarify.
Sure. For the tool itself, you can always visit our Meridian website. And let us just go back into the presentation here. So what's being displayed on your screens right now, if you were to, once you receive the presentation, or by going on to our meridiancu.ca website, you tag into small business, and once you're into that small business page, you will see the tools and calculators piece of things, where you will be able to pull up the business cash flow calculator. And that would be the exact same Excel version that you're seeing here that we've presented. And it will also allow you to change your start month. So as you can see, like Roshan is showing, let's suppose you plan to start up in July or August. You can actually change the dates so that it will adjust to your business fiscal year.
Perfect. Thank you so much. That does answer that question. So like I said, we will be sending out an email, follow-up email with all the links and resources that you need. So thank you again, Meridian, for the great presentation this morning. Hopefully everyone feels like they're well on their way to be able to begin their cash flow for their business. And if there's anything that Meridian or the Brampton Entrepreneur Center can do to further support you in your efforts, feel free to reach out to us. Always happy to connect and support you any way we can. So thank you again. I hope everyone has a great day, and looking forward to seeing you all next week for our session with Meridian. Thank you again, everyone, and have a wonderful day.
Thank you, Jennifer.
Thank you.